I wouldn't be surprised if we see kind of a quick move up to 140,000 or 150,000 and then some more consolidation going into the end of the year.
Bitcoin's effective inflation rate now is below 1%. 99% of all Bitcoin will have been issued within the next 9 years.
When you can start sending Bitcoin itself between various apps, that's going to be a huge sign.
Wouldn't it be nice if me as a Cash App user and you as a Venmo user could send each other Bitcoin directly instead of having to route around through the banking system in order for us to send money? And Bitcoin solves this so well because it's just this open protocol that anybody can plug into and start to speak.
It must be terrifying for walled gardens to be trying to figure out how to incorporate Bitcoin without giving everything away.
Big players that typically were very against Bitcoin, such as JP Morgans of the world, are calling it the debasement trade. I mean, it's not a trade. It's your money is melting.
Gentlemen, welcome to another Roundup episode. It's been a while since we've recorded one of these. I'm curious to know what you guys are thinking right now, what your thoughts are for Q4, and then maybe even into 26 and 27.
We'll see what happens from here and whether or not we reach some escape velocity and really get the gears turning. I think there's a good possibility that that's the case. But it does seem like this market is still very contained or constrained by the different dynamics that are at play with the institutional involvement of the ETFs and the treasury companies and all that. So I wouldn't be surprised if we see kind of a quick move up to 140,000 or 150,000 and then some more consolidation going into the end of the year. And then the big open question is, does that continue? Are we going to be doing some type of like topping out and having 2026 be more aligned with previous cycles? Or are we going to continue with the stair step? And is this thing going to extend into the middle part of 2026? I tend to think that's the case. We've got so many tailwinds with the Fed starting to lower rates, with the election cycle coming up, and the incentive that the administration has to kind of juice the economy and continue to run things hot. There's just hasn't been the type of euphoria that I would expect to see to bring a big, long, drawn-out bear market. Now, other markets seem to be kind of screaming higher and melting up even more so than Bitcoin, right? Like gold is screaming above 3,900 at this point. It's about, looks like a magnet to 4,000. And the S&P 500, the stock market, has just been melting up day after day, it seems. So it feels like a lot of the euphoria that we all expected to go into Bitcoin has gone in other directions, which has got to leave you wondering, like, is it going to start to rotate into Bitcoin, or is Bitcoin going to play catch up to all of that? Remains to be seen, but I'm pretty constructive. I'm pretty bullish here going into the fourth quarter.
So, John, I want to hear your thoughts in just a second, but Trey, I kind of want to reiterate something you said, I believe, on our last conversation, and you essentially just said it here, which is without that crazy euphoric run-up, we're not going to see that massive crash. I have shared that same sentiment with other people. It's really resonated with them. It makes a lot of sense, and I think it just helps to kind of set the perspective about where we are. Yeah, to your point, there's been a lot of money into Bitcoin treasury companies, and people are putting their money elsewhere at the moment. I don't know where it will all shake out, but without that crazy run, we're probably not going to see a crazy crash.
Yeah, all of the treasury company money that came in has already kind of been deflated. It's like there's no, you can't get away with like the weird leverage and arbitrage plays in the Bitcoin market for very long, and before the market comes back to kind of bite you and check you and keep you in line there. So I would really be curious to hear what John has to say about all of that and whether or not he feels the same way.
Yeah, no, absolutely. I certainly see us continuing the march upwards that we've seen really since the bottom in 22, but ultimately since the ETFs were put in place almost 2 years ago now in the beginning of 2024. And I think, as you've commented, Trey, other markets that are all measured in dollars as a unit of account are continuing to see higher nominal valuations, whether that's the SPX, the S&P 500, or the NASDAQ, or gold, almost hitting $4,000 per ounce. And ultimately, that's the debasement of fiat currency, of the dollar, of the DXY, which we've seen a decrease in at least 10% this year, right? The dollar that we're measuring all of our goods and services in the economy continues to lose its value. And so we're going to see higher nominal prices, both in Bitcoin for sure, and then definitely in other assets. But the difference between Bitcoin and the other assets, yes, gold has a semblance of a degree of sound money, right? And doubles every 60 years and is about a 2% inflation rate. Bitcoin's effective inflation rate now is below 1%. I mean, it's 0.8%. We're almost at 95% of Bitcoin that have been issued. So we have this fixed supply mechanism. We know how much Bitcoin is going to be issued into the future. 99% of all Bitcoin will have been issued within the next 9 years. Now, once we hit 2034, 2035. So I do see us extending to run as we typically have in the 4-year cycle later this quarter when we typically see the highs, but into next year, because we haven't really seen, we've had slight Fed funds decline now, one rate decrease. Maybe we'll see one more at the end of the year, but we haven't seen where we know things are heading in the continued of the rate cycle, which just screams easier money. We know the policy of, and it's more of a fiscal dominance era, and you're going to see more spending, try to hit the growth. We have all the investment CapEx coming into AI, trying to build out more and more data centers. And ultimately that screams inflation, that screams more money printing, which ultimately will be great for Bitcoin's price as it's measured in dollars. So I think, this is the same narrative we've been talking about now for a while, but I think the price is starting to reflect it a bit. And we'd had some bigger sellers or maybe positioning into some of these treasury companies, kind of shifting of the books of who's owning these coins and trying to play some fiat arbitrage games on that side. But ultimately it's, 21 million Bitcoin and having cold storage and in custody of your keys, then you can, sleep well at night and keep waking up to some more all-time highs. As we went to bed Saturday night and hit it, and a little bit of a check down, and now, okay, we're at 125K. It's a nice round number for people. But I think, it's exciting time to be building in Bitcoin and moving in this direction where the market's waking up to it, and big players that typically were very against Bitcoin, such as JP Morgans of the world, are calling it the debasement trade. I mean, it's not a trade. It's your money is melting. You better get some that is going to preserve, at the very least, your purchasing power as a store of value, and then do all the other things we know Bitcoin can do.
I love that. The debasement trade is so apt and so good. And, one thing that I think is interesting to point out is that the federal government in the US is shut down and has been for going on a week. And yet markets seem to just not at all be concerned, right? Everything just continues on as if this is not a problem. And it really isn't a problem because we all know exactly how it's going to come out. They will, there'll be some concessions on both sides or whatever, and they end up with a compromise that still lifts the debt ceiling, that still, locks us into more federal spending and more deficits and more debt. And I think the market's just figuring all of this stuff out. The debasement trade is becoming part of the psyche, and the debt tantrums around the debt ceiling and all that stuff that used to happen in years past, nobody cares anymore. Literally nobody cares. We all know how this is going to play out. And so why even pay attention to it, I think is the general sentiment that's out there.
So I don't know how widely this has been circulated or if you have any thoughts on this, either of you, but I saw a headline recently about the 4-year cycle changing to a 5-year cycle because of the changing of the debt. I guess this is probably in reference to Yellen refinancing the shorter term debt. Have you seen that? Does it ring true to you? Do you think that could be the new trend, or is it just that this time is very unique, very different in a true sense? It's always this time is different, but is it just that this cycle has finally broken things?
I think the Bitcoin market and the price has been moving further away from being driven by the halving cycle, which is on a 4-year, and similar to an election cycle, and more closer to the waves of liquidity that are coming and going in the broader macroeconomy. And Bitcoin is treated as a macroeconomic asset at this point. And the halving itself, it's much less just in terms of the raw numbers than it used to be, right? And so I think that trend has been happening for a while. And now with what John is talking about, this fiscal dominance and just the numbers that we're talking about in terms of the debt and deficits, that has become so much more of a driver of assets and the economy overall. And Bitcoin is not going to escape that just from the magic of it being what it is, right? And the magic of it being Bitcoin. It's trading much more in line with other assets that are out there in the global macroeconomy.
Yeah, I agree. And I think I don't know if it's necessarily 4 or 5 or just the natural business cycle of expansion and contraction that will actually be led by free market activity more so rather than kind of maybe government regulation or the Federal Reserve controlling the price of money, and interbank lending between banks. So I think as we see, as Trey mentioned, I mean, the government shut down a week and it seems like things are just still humming along, and it makes you question, like, okay, how much of what they're doing is actually adding value, or how much is just another line item that money is automatically being funneled into, and we're not really seeing a lot of value, from a societal point of view. And we have these huge line items on the budget, right? Over $1 trillion of interest expense a year, Medicare and Medicaid being $1 trillion, the military budget, and Social Security being another, massive one. As we saw with Doge earlier this year, there's nowhere really for the government to cut that isn't going to cause massive backlash amongst most people who are used to ultimately the social safety net here. But rather than just being a safety net, it's become a massive part of the economy in terms of where and we're not seeing the multiplier effect of where federal funds go. You see kind of a downstream benefit in the economy, whereas a lot of the private capital coming in now, maybe to the data centers and AI, are providing booms to towns, creating new towns around physical infrastructure that's being built. So long as that's the case and people just inevitably think, the debt doesn't matter. Well, it does matter, and it's been weighing on our future, but there really isn't a lot for kind of the talking heads to do about it other than, raise the debt ceiling, and we continue the march towards $40 trillion in debt, which we really don't even have a concept for to begin with. So, yeah, it's, and I think one of the big catalysts when we're talking about what could get the market, kind of the Bitcoin price, to keep jumping even further, I think I keep coming back to, is still the impetus and the executive order that went into place earlier this year of finding budget neutral ways and establishing a strategic Bitcoin reserve and buying a lot of Bitcoin at the nation state level beyond what was just confiscated. I think we already know many other nation states are actively mining Bitcoin, buying Bitcoin. I think it's around 1 in 6 or 1 in 7 at this point. And that number is going to continue to grow. That was shared at the Bitcoin Policy Institute's summit earlier this year. And that just means more and more demand into Bitcoin.
So in the meantime, since our last conversation, you guys have been out and about. I'm curious to know, I know you guys were both in Nashville. I don't know where else you've been. What have you seen out in the wild? What are the conversations that have gotten you really excited about the future of Bitcoin, whether it's, Q4 or 2026 or just off into the future, things that you've seen that you think are really going to be needle movers?
John and I were both in Nashville for the Bitcoin Park Custody and Treasury Summit, and then I think John stayed around for Imagine If. I wasn't able to join that, so I'll let him speak to, the implications of what was coming out of there. I hosted a panel on collaborative custody and community custody, and it was a really great conversation that just kind of sets the foundation for folks who are kind of new to Bitcoin. And there were a lot of people in that room who seemed to be either new to Bitcoin or new to, the institutional world of how Bitcoin is being adopted, and they're there to learn. They're there to understand what the landscape looks like, and the content that was curated for that was to help educate those types of people on the landscape of custody, on the landscape of treasury management, and those conversations were really helping to facilitate some of that education. So I'd encourage anybody who is listening to this, go check out the panel that I hosted there. I think you can find it on the Bitcoin Park feed on X and on YouTube there. But it was a really great, short 25-minute conversation about, what exactly is the concept of collaborative custody and how can it be used in a beneficial way for people who are holding large amounts of Bitcoin, and doing so that minimizes trust, which is hugely important when you're talking about institutions that have, complex governance structures, organizational structures. And when you start talking about nation state adoption, as Jon is mentioning, I'm still very bearish on the Bitcoin strategic reserve and what it actually turns out to be anytime in the near future. But as and when nation states do adopt Bitcoin and start holding it, they need to be thinking about this in a very strategic way as to who actually is controlling the keys to the Bitcoin. Just like they at least claim to hold a whole bunch of gold in Fort Knox, they also need to hold their own Bitcoin. And this multi-key structure that Bitcoin provides natively gives them a really great opportunity to do that in a flexible way and use the attributes of Bitcoin as programmable money in a way that can advantage them in the custody of it and not have to rely on corporations or any other outside forces there.
So, Trey, I'm curious to know a little bit more about who was in the audience, not specifics necessarily, but who are the types of people that seem most interested in this? Obviously, it's going to be a lot of Bitcoiners. Are there certain types of institutions? Is it more family offices? Who are the people who are in the audience who are trying to figure out these custody solutions?
Yeah, it's family offices, it's high net worth individuals, it is asset managers, and it's registered investment advisors who are all trying to come up the learning curve on the topic of Bitcoin, generally speaking, but then, really just about how do you maintain a treasury strategy for Bitcoin at the organizational level, or maybe just, within the construct of a family or individual estate planning and that kind of thing.
Hmm. And what else was going on at the summit? Was it entirely focused on self-custody? And then who are some of the other, I guess, like what were the other conversations that were happening during that time?
Yeah, a lot of the conversations were around estate planning, legacy planning. A lot of them were about just the kind of programmability of Bitcoin when it comes to custody and these, the different options available for custody. A lot of it was focused on the actual treasury strategy stuff and some of the Bitcoin treasury company, um, you know, projects, I guess you could say, that are out there. How do you value Bitcoin? How do you use the credit markets to your advantage there? A little bit around trading and that kind of thing. So it really ran the gamut across some of the important topics that people in the institutional world or at that like higher level of finance would be interested in understanding.
So, Jon, Trey just shared about the self-custody summit. I know you were there. I'd love to hear your thoughts on that, as well as Imagine If. I know Cathie Wood and others were there, big event, and would love to hear what you saw there that you found particularly encouraging or bullish for the future of Bitcoin.
Yeah, absolutely. Huge shout out to Bitcoin Park, Rod, and the team for putting together an awesome few days of the Custody and Treasury Summit and the Imagine If. I think what really stood out to me was this intersection of energy, AI, and Bitcoin, and more energy being needed on the AI compute side, and realizing that Bitcoin can be an unlock for tapping into more energy and wasted energy sources, right? And Tennessee is an interesting state because they have quite a bit of nuclear build out. They were talking about also the first SMR, small modular reactor that's being built out over the next couple of years in Tennessee. So they're generating a lot of power. A lot of that can go at first, and you plug in Bitcoin miners. It can make any project profitable on the short end if you have low enough cost of energy, and then being able to be there to bring down the price of cost of energy to retail markets, where in many markets you're seeing an increase in price per kilowatt hour of general metropolitan areas as there's more and more demand for computing resources for AI. So I think seeing the way a lot of energy producers are thinking about Bitcoin, AI companies, and then ultimately some amazing projects on just the Bitcoin side, and seeing more and more adoption and questions from legacy finance folks, CFAs, others that have been wealth managers for a while and wanting to understand the trade-offs of custody, how to do it, how to do collaborative custody, what does it mean to hold your own keys, and what does that mean for your clients, for estate planning, legacy planning, trusts, and so on. There's so many use cases and implications here, first from Bitcoin as the store of value side, and then moving into a medium of exchange.
So, Trey, one other thing that's come out in the last couple of weeks is that Walmart's OnePay app is going to begin allowing its users to purchase Bitcoin and other cryptocurrencies, which you and I don't care about nearly as much or at all. In addition to that, SoFi has also recently come out with an announcement. I think it was actually at the end of June, but I haven't seen it circulated until recently, that they're going to be offering some options like that as well. So I think it would be interesting just to talk about what some of those implications might be for more people having easier access to Bitcoin. I mean, to some degree, that already exists. People have access to it with Cash App, and you can buy at least Bitcoin exposure through ETFs. I think probably like Venmo, PayPal, places like that, even if it's not the real deal. But first of all, any thoughts on what this might mean for Bitcoin? And then also, what would be that next thing in your mind that really brings in retail? Because currently it's been a corporate adoption year. We haven't seen a whole lot of retail. If anything, people have probably been selling to institutions. But do you see what is that catalyst for the next wave of retail adoption?
Well, in terms of OnePay, I mean, all of these different new projects that are integrating Bitcoin into them increases the surface area of exposure that Bitcoin has to the world. And that's always a good bullish thing. Do I expect that there'll be a mass wave of people who are using Bitcoin in their OnePay app and then buying goods at Walmart with Bitcoin essentially, or selling it right there? Probably not, right? Like, this is one of those incremental improvements of surface area, like I was saying, that just helps to bring Bitcoin forward in people's mind and helps them to just, first of all, recognize, hey, Bitcoin is here in this place that I never even expected it to be. I guess it's not going away. And we've seen that adoption with Venmo. We've seen that adoption with PayPal. We've seen the adoption with Cash App. Square is introducing their terminals. I'd love to hear an update on the progress there from Jack or whoever else. But though all of those different touch points are touch points in people's mind every time they see them. It's impressions in their mind that gets them more comfortable with the fact that Bitcoin exists, and it's something that they at least should be aware of and be paying attention to. So that's always going to help drive adoption forward. I think the next step for these different platforms that are incorporating Bitcoin internally, but there's no intra operability there is when they actually are starting to allow for Bitcoin to kind of leave their platform based off of the ability for you to send it elsewhere. So Cash App does provide this, but Venmo doesn't. I think PayPal was starting to talk about doing that. But wouldn't it be nice if me as a Cash App user and you as a Venmo user could send each other Bitcoin directly instead of having to route around through the banking system in order for us to send money? And we can only send dollars, and you have to sell Bitcoin in order to do it. It's just, there's so much friction, and Bitcoin solves this so well because it's just this open protocol that anybody can plug into and start to speak. And so as long as they open up the gates there on both sides, these two apps can start to communicate with one another and communicate with any other Bitcoin address, Bitcoin invoice that is speaking that same protocol and language. That network effect continuing to build out is going to be really powerful, but it is going to take some time for people to get used to it and understand how to use it. And then in terms of like the next steps for retail, look, I will maintain that the number one driver by far is always going to be the price. So when we see the price start to run very drastically, when it goes from 125 today to 150 to 250,000 or 400,000 in a fairly short order, retail will be participating in that. I promise you. And a lot of those people are going to be buying at the top because they're getting caught up in the euphoria. And that's just a natural process that we go through every single cycle. But some portion of those people hang around, some portion of those people educate themselves and understand the value proposition much more deeply, and that ratchet effect will continue going forward. So do I see some kind of like aha moment for the world where OnePay and PayPal and Venmo and Cash App and all of these people are using making Bitcoin available for payments, and that's going to just drive a massive wave of retail adoption? No, not going to happen. What will happen is that the price will go higher and retail will come in like the flood.
if you have used Bitcoin, you've experienced how simple it can be. I mean, there are plenty of complexities, but it is very freeing to be able to send your money wherever you like, at the snap of your fingers, or if you're doing it on chain, it may take a little bit longer, but it's a simple, relatively simple process with the current tools we have. It is very frustrating if you're trying to go between institutions that aren't playing well together, whether it's trying to send Bitcoin or generally is trying to send dollars. It must be terrifying for walled gardens to be trying to figure out how to incorporate Bitcoin without giving everything away. So it'll be very interesting to see how Walmart, SoFi, others who are going to be entering the space, how they handle things. And I do think that, to your point, when you can start sending Bitcoin itself between various apps, that's going to be a huge sign. Jon, any thoughts on your end? We've just been talking about Walmart, SoFi, other places allowing people to buy Bitcoin, increasing that surface area. And then really, what are those next, besides number go up, and maybe that is just the answer, what leads to that next wave of retail adoption?
On the interoperability side, and to your point, Trey, I love what you were saying about needing more apps, needing Bitcoin, and ultimately the Lightning Network being the language of money, right? Just like the internet, and now we can exchange value or exchange information at the speed of light wherever around the world, and have different apps or companies interact, likely using email SMTP protocol. We can now use Bitcoin and Lightning to have a better user experience, ultimately, to your point, whether it's Cash App, PayPal, Venmo, or Zelle, whoever has kind of the captured retail users at this point interacting with fiat and now starting to move over to Bitcoin and Lightning. We can really create an opportunity for people to send their sats where they wish at the speed of light. And we're seeing Roy Scheinfeld from Breeze had a great article that he just came out with over the last week. I highly recommend everyone reading it, and it really speaks to this point in using Bitcoin to its fullest utility, which isn't just as a store of value, but it is, as was stated in the white paper, digital peer-to-peer cash, right? This is something that in Lightning has become this protocol as a layer 2 on Bitcoin, that other layers are speaking that language as well, whether it's eCash, Chalmy and Mints, Fedimints, as well as Arc, Spark, other Liquid, right? These are all different layer 2s, but ultimately they have to be interoperable with Lightning, and you need to have unilateral control, over your Bitcoin to use it in a self-custodial way. But even some of these custodial platforms can give you, as a user, the choice to send real Bitcoin off of the platform, via Lightning. So I think it's definitely promising, and will have to come from certainly number go up, as you're mentioning, and then user demand, right? And saying, hey, if you're not going to integrate Bitcoin or Lightning, I want to be able to earn or send some sats out. I'm going to go to a different platform that is enabling that functionality, because it ultimately will drive the most value to the individual. So I think it's going to take a while for sure to get there, but some of the big names wanting to get in, learning about it, making a splash, seeing, learning about the ecosystem is a great sign. And because those are the incumbents. Otherwise, there will be a lot of sort of creative destruction, right, in the process as this new Bitcoin economy and ecosystem evolves. But it's opt-in. Anybody can hop in. I know, Trey, you were sharing some of the experience at the Bitcoin Treasury and Custody Summit. There are more and more folks across legacy financial markets that are learning about Bitcoin, understanding the trade-offs in custody. And then when it comes to a lot on the energy side, an intersection of Bitcoin, energy, and AI, where there's a lot of focus in different markets and build out of capacity, seeing those how those interface. And now a lot of the Bitcoin miners turning into AI data centers and having that capability and being closer to the energy generator. That's really the infrastructure layer that I think comes first stepwise. And then we'll see more and more, retail tools. And the reason to spend Bitcoin is this is just what I'm going to use to buy what I need to live my life. We're not at that point yet, right? And there's still a huge opportunity cost to potentially selling your Bitcoin of an asset that's appreciating 50 to 60% year over year. But I encourage those to definitely take a look in your area, or where are those businesses that are accepting Bitcoin, and start participating in that circular economy. Start testing out the tools, the wallets that you like to use. I'm getting a local coffee shop here. They have a Square terminal, and there's a beta going on. So I'm connecting them with the folks at Block, and seeing if we can get more local places that have the infrastructure, again, to the point that Square is turning on payments for merchants. This has a huge It's so much simpler and easier, right, than saying, I need to implement another separate solution on the payment side. So, yeah, a little long-winded way there to say, but I do think that framing Bitcoin and Lightning as this language of money, the unit of money that we'll be able to interact with across a whole host of different interfaces, whether it be mobile or on the web, is really going to transform the way that we can live day to day.
So, guys, we've talked about a good bit today. Please share any final thoughts you have, as well as where people can go to find out more about your work. And maybe the last thing is, we've mentioned that NGU is going to be what brings retail in. So, I guess an additional thought would be, what is the price? What is that price for this cycle that you think the Bitcoin price will actually reach, and then encourage retail to get in? So maybe, Trey, if we can start with you in these final thoughts for today.
I think one thing that we're starting to recognize, or at least I'm starting to recognize around the price, is that it's not just a specific number that gets people's attention. It's the pace at which it moves higher. So, we could get to 150,000 and maybe it takes a few weeks. But if it takes only a few days, people will pay attention, like much more. They'll be much more intently focused on something that's moving up so rapidly higher than something that just kind of grinds and churns its way upward. And, I think that only goes so far, though. That churning, that grinding, just kind of working through new supply over a long period of time, that can only last so long, because at some point there is an inflection point. We're talking about Bitcoin right now, but this is true in all markets. And you see this in the stock market with blow off tops, with specific stocks, with the market in general. You see this across any other asset that trades in a free market, that there is always some type of inflection point where euphoria happens and the price starts to get away from the market, and to the point where there's so much FOMO and people just start piling in, totally oblivious to the price. They don't care. They have to get in because it's going from 150,000, maybe that's the inflection point, straight to 1 million, right? And you just can't miss it. And so you just pile in, and at that point, that's where leverage starts to build up. That's where people start to get in trouble. So I don't think it's as much an issue of a specific price, but more an issue of how quickly is Bitcoin gaining value. The gold trade, I think, is starting to get like very heavy and long in the tooth, simply because it has garnered so much attention because it's just been straight up for such a long period of time. Like, I wouldn't be surprised if that has a pretty big period of consolidation, but it could continue up for even more of a big spike, blow off top before that happens. But it's starting to get a little bit frothier, as far as I can tell. Everybody's talking about it. Literally, we just had a new all-time high for Bitcoin again, and it happened overnight, and nobody knows. Nobody cares at all. Nobody cares. It's just not on anybody's radar. So anyway, that's my thoughts on it.
And then where can people go to keep up with your writing and thinking these days?
Yeah, absolutely. My newsletter is firebtc.substack.com. I write there every week on the issues of financial independence and Bitcoin. The most recent one was about this lottery winner in Canada who chose to get $1,000 per week for life instead of $1 million lump sum. And by the way, in Canada, you'll read this in the article when you check it out, there is no tax on this type of a windfall winnings from lottery. So that just makes the decision so much worse. But anyway, I dig into the numbers there. It's a really cool read. Go check it out and subscribe for free to see all my latest thoughts on that kind of thing. And then you can follow me on X at ts_hodl.
Yeah, it's hard to put a fiat price on it. I think Bitcoin knows no top because fiat knows no bottom. We're just going to keep seeing more money printing. I agree, Trey, that the speed at which at least the headline price number will certainly capture more attention and inspire more FOMO that we've seen in previous cycles. But it does seem like at this point, you were mentioning touch points earlier in terms of Bitcoin's brand ultimately, and how many times it takes to stop ignoring something. I think if it's the 10th or 12th or 15th time someone's looking at it, okay, keeps hitting all-time highs. I feel like I keep hearing that. What is this Bitcoin thing? Maybe I should read a book. Maybe I should just learn a little bit deeper about this alternative money that was created now, coming up on 17 years since the white paper, right, came in here on Halloween later this month. So that will certainly inspire a bit more of the retail coming in and just setting up the DCA, and maybe just realizing, hey, I'm in a dollar cost average. Maybe I should take, if I have some more fiat laying around now, such as this lottery winner should have done, which is take the money and buy a bunch of Bitcoin, and then maybe with some of the leftovers you DCA and just get it, get in, set a decent cost basis now where we think the price could be running up higher, and certainly get your hands, being promised future fiat is not a great promise when you're losing your purchasing power. So I think that level of just financial literacy needs to come back out to the fore. So it's awesome what you're doing, Trey, all around align the FIRE movement and financial independence. And I think when it comes to freedom and independence as well, what we're seeing at this intersection, and I think the importance of Nostr and owning your own identity online, is you're going to see more bots and more AI take over different industries and use cases, is really having your own cryptographic keys to verify who you are and who are those around you that you're interacting with. And I think that message for me is something I'm really focused on continuing to work on. And I think when it comes to Bitcoin adoption, there's a lot of the Bitcoiners realizing that's more of a first mover. Nostr's a little newer, being developed 4 years ago, early days, but that there's a lot of those conversations, I think, happening as we as we get the wave of CBDCs that are also going to be, that are coming out and will be coming out over the next few months, in a couple of years. I think Europe is going to be maybe the first next major one to launch after China has been doing it for a while. So happy to connect with anyone else beyond this. You can check out my website, satoshihealth.com. I'm helping businesses integrate a Bitcoin strategy. And then soundhsa.com. We'll be launching a Bitcoin health savings account coming here, and excited to continue this conversation with you guys.
All right. Well, I appreciate your judicious answers today as far as the NGU price for retail. Thanks for your thoughts as always, and we'll catch up soon.
All right. Thanks, Josh. Thanks, Jon.
Cheers.
Well, friends, it's a wrap. Thanks so much for listening to this episode of the Bitcoin Playbook. If you want to reach out to either me, Trey, or Jon, you can find those links down in the show notes. And be sure to check out soundhsa.com and the FIRE BTC Substack. As always, keep building, keep growing. And until next time, keep living and leading well.